25th. Hope you will have a wonderful day. This is, of course, your daily financial news. This is a show we look to do 7 days a week at 7:30 a.m. It is live, no editing, and we just kind of talk about what's going on in the market, real estate, cost of capital, and of course, the consumer. The consumer is the big deal for me. That's the one thing I track the most because, of course, they are my competitor and, frankly, also my customer. So I like to see what is going on there. Before we get into daily financial news, I just want to give you a little taste of what happened over the weekend. First and foremost, if you ever have seen my goals video, you might want to check out yesterday. I've actually tweaked it, changed it, modified it. I am now tracking what I call my positive impact score, which is a score kind of that scales from 1 to 100,000 based on things that we do on this channel. With the most important one, I need to hear from my students, my followers, when you get deals done. Again, why am I doing all of this? Because I'm looking to have a positive impact, frankly, in the world, the middle class, and of course, anybody who chooses to follow me. So in order for me to track my score, I need some interaction, whether that be a book review on Amazon, or most importantly, again, a deal getting done by one of my students. So if you could help me understand that, either send me a comment in a YouTube video, probably easiest in our private Facebook group, that would be wonderful. Or if you feel more comfortable, send me an email or whatnot. Thank you, thank you, thank you. Next, I want to remind you that one of the things that we do here on the channel is we do have that private Facebook group, which I call our community. It is a safe place to ask questions. I've seen a few comments in the last couple of weeks about people raving about the group. They feel safe to ask quote unquote newbie questions. Apparently some of the more standard platforms out there are too big for their britches and they feel almost attacked when they ask questions. So feel free, if you're new and you're part of the group, ask any question you want. We all start somewhere, so go for it. And then finally, over the weekend, I rolled out my second course, which is really about several things. But most importantly, at the start, kind of spreadsheet one, we got to stop talking price. I think too many families, too many individuals think price. They go shopping, they look at the price tag. I am trying to start an initiative, a push to turn price into time. Because we need to understand what things cost in time, units of labor, discretionary income. This is why credit cards get high. This is how debt just eats us alive. That's how the slippery slope of consumerism in the middle class hurts. It's when you don't appreciate what it costs you in time. And then, of course, I'm trying to increase the communication and talk about money inside the home, budgets, actuals, trying to introduce a concept called freedom dollars. You can call these discretionary. And then, of course, most importantly, tail end of spreadsheet number 2 is your financial health score. How you doing, right? I think most of us are at different points along that 5-step spectrum, with the most scary one being the slippery slope, because that's where the credit card companies and the car companies come after you because you're credit worthy and you got a little bit of extra. So again, really proud of that. So moving on to the daily financial news of the day. First and foremost, I've been telling you, I own this stuff. Rents in apartments, ouch. There are many cities, mostly urban core, that are suffering. All of these numbers are about studio apartments. I'll just go through the cities, talk about how far they are down in 2020. And again, there are several. I think there are 6 or 7. San Francisco, down 34%. Chicago, down 20%. New York, down 19%. San Mateo, this is the Bay Area, 17%. Alameda, 18%. Santa Clara County, which is the county I reside in, 19%. And Boston, 20%. Other cities with double-digit gains, somewhere between 10 and 15%. I'm sorry, not gains. Woo, wow. Fall, drop. What do we got? Seattle, Portland, and Washington, D.C. Folks, bigger is better is not always the right idea. owning apartments in this environment, in the urban core, in the big cities that used to be the rock star, not so much. There are a lot of companies, a lot of investors who have bought in these urban cores that will be suffering for years to come. I promise you a 34% rent drop is going to be felt. It is going to impact NOI. It is going to significantly drop the value, let alone interest rates rising and the cap rates rise. It is a double whammy. I want to remind you about a video I did with Jonathan Twomley probably 90 days ago. Just with a couple of small tweaks, we turned a $120 million building into $60 million. And I think that was with like a 10% rent drop. We have some 34%. People pushing bigger is better. Don't have your best interest in mind. Again, do the homework, do the work, and see what's going on. And of course, I am wearing my do the work hoodie. This is what I work in now because it's so cold here in the morning. So anyways. So again, realize that that is going on. Just so you know, there are cities on the upside. I found two, New Haven, Connecticut, and Tampa, Florida. New Haven, Connecticut is up 22%, and Tampa, Florida is up 15%. A couple other things going on in the world. We have the Super Bowl ads. There are companies that are choosing not to talk, which is interesting. Budweiser, not going to do a Super Bowl ad for its main product. This is, of course, the company that brought us those talking frogs, and I think it was guys saying "What's up?" So it'll be a miss. They've brought some of the most iconic ads to the Super Bowl. Coke is decided not to advertise at all. Pepsi and Audi are choosing not. So again, the Super Bowl ads will be a little bit different. A little bit of the stalwarts that have been there for years will not. Joe Biden is kind of in the news again, as you would expect, as our president, in this case, talking about EV or electric vehicles, hydrogen vehicles. It is interesting that people are talking about how Joe Biden and the new administration can push Tesla and General Motors or GM even higher. They're talking about potentially consumer tax credits, cash for clunkers, and other things. As Joe Biden and the administration get past the stimulus, get past the infrastructure, there is talk about climate control or climate change being the next most important thing. So we have lots of things coming our way as consumers that we need to watch, and that would be very interesting. I don't know if you've been tracking this. I think I talked about it on Saturday. It might have been Friday. GameStop. GameStop, of course, is that video. It sells video games. It's a brick and mortar store. Its stock is up again 50% on an epic short squeeze. It has gone from $6 to over $100 in the span of 4 months. Most importantly, going from about 25 to over 100 just in January. I don't know if it is still halted, but earlier this morning, the stock was ultimately halted. That rarely happens on no news information. So it will be interesting to see what is going on. But yes, there is an epic short squeeze. It, at a time, was one of the most shorted stocks in the market. At one point, I read it had 150% of its shares shorted. That would be like, hey, if the float for a company is 1,000, there are enough people out there that have sold 1,500 short. So yes, that is set up for an epic short squeeze. Next up, I think we have more signs of kind of bubbling supply chain issues, which actually may show up in inflation data. That is going to be something that is interesting to watch. What do I mean? Something as simple as shipping containers. You know, those big shipping containers that you see going on cargo, I don't know what they are, ships, I guess, right? They stack them like 9 high and they're all different colors. Well, apparently the cost for shipping containers has risen 300% in the last 90 days. Quote unquote, if you read some things, there are actually shortage of shipping containers. But as I dug into this and a couple of other articles, the truth is there's enough shipping containers. They're just in the wrong place, which is total supply chain. It looks like that essentially China economy is rocking and rolling. They want to ship goods throughout the world, but they're not getting the containers back, which to me means they're not buying US goods. They're not buying goods from Europe. They're just selling a bunch of stuff. So expect their trade partners to be unhappy about that as we move forward. Let's see, what else do I got? Oh, just for sample, where inflation may show up, IKEA, right? I don't know if you know who IKEA is. They basically known for all the furniture that you assemble, big old stores. They estimate that the rising shipping container costs of 300% is impacting 10% of their products. Shipping containers are on barges. Thank you. I didn't know what word that was. Barges, yes. IKEA again is estimating that shipping costs are rising the price of 850 of their 8,500 products, or 10%. This is impactful, right? This could show up in consumer data, so we need to watch out for that. As far as the cost, it used to cost $1,200 per container. Now it is $6,000. Again, the problem is we're not shipping empty containers, or the countries consuming aren't building, and that is causing an epic kind of supply chain problem. I don't know what else to say, right? The containers that used to be moving around the world now only are going kind of one direction. You know, China needs those empty containers back, but if they're not buying anything, nobody's shipping them back. Next up, and this one was interesting, Goldman Sachs actually said this morning that parts of the stock market are in a bubble. Yes, Goldman used the bubble word. But we have to be careful about that. As you would expect, a company that makes a significant portion of their money trading stocks, they were very kind of, they wanted you to look over there when they said bubble. So they pointed at penny stocks, which is probably an area they don't play with, and also negative earning companies, right? Companies that have negative earnings, they're actually trading at a 40% premium to the rest of the S&P. So again, they were very specific. Hey, look over there. What's going on? That is very 1999 specific. And again, if you don't know 1999, look it up. There were lots of companies that were selling $80 product and wrapping it in a $100 bill. They were lots of negative earnings. They were getting valued on what we called eyeballs back in the day. It was a crazy time. So the end, that's what I got for you. Again, it's a daily financial news. We will do this tomorrow at 7:30. I want you to have a wonderful day. We will talk again. And yes, it's at 8 a.m. I will be interviewing Greg Dickerson. I've got 3 exciting topics for him. Take care. Bye-bye.